You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It's Education Wednesday here on the network. That means it's time once again for Options Bootcamp, what the cool kids call the old OBC. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging these days. Remember, we put this content out a wide variety of ways for you guys to get access to it. Of course, on demand, just about every platform under the sun. If you'd like to engage more immediately, like to join the live, not just for this show, but for everything we do throughout the week, as well as get some cool exclusive shows, including our great pro Q&A sessions. Those have been just awesome. It's really been a great, just who's who of people for you folks to pick their brains up in the world of options and derivatives. And the great part is they're having fun too. Everyone who does it wants to come back and do it again right away. So that's been kind of fun to see. So we're having fun. You folks are having fun. If you want to join the party, theoptionsinsider.com/secret club. Remember, don't tell anybody. It's just me and you talking here. All right. And of course, if you like what you hear, keep rating and reviewing on your platform of choice. As we have all seen yet again this year, there is a massive influx of new people discovering the world of options. And a lot of them go to a place like, let's say, Apple Podcasts or Google Podcasts or Spotify, and they type in options and they see what they find. And they find their way to a show like Options Bootcamp. So your ratings and reviews do help those folks find a path to our door and hopefully keep them on the right path throughout their options trading journey. And joining me to help keep you on the straight and narrow of options trading, even though he is the black-hatted one, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. Dan, welcome back to the program. That's my mission for 2022. I want that branding to catch on, the to sir.
Oh, I think it's taken hold, Mark. I think it has taken hold. You're a trendsetter, my man.
I am a trendsetter in the world of options. Speaking of the world, and indeed the year of options, let's get to it. It is time for our Options Bootcamp 2021 year in review. All right. It's been a crazy one, I think, to put it mildly. I don't know, Dan, when we kicked this year off, weren't you like a lot of people thinking, after 2020, I think we can all use a nice little quiet one, right? Weren't you expecting a little bit, perhaps more sanity in 2021 than we saw in 2020, sir?
I sure was hoping for it. I don't know what I expected, but I sure was hoping for it.
Yeah, maybe expecting is too much, but hoping. And then, of course, we all saw January kick off. It didn't even wait. It didn't take to like March, right? Like it did in 2020 where everything exploded. It kicked off in January last year. And we're all like, wow, yeah, we're not out of the woods by a long shot. But you know what? We're also not out of the woods when it comes to the craziness in the world of options. There's a lot that happened over the course of this year. A lot to look back on. A lot of lessons to take away from this year. Before we get to our lessons from the mad year that was 2021, though, let's go back. I want to look really quickly. It was instructive for me, probably informative for you, because I know we have a lot of new listeners. I see the numbers. So some of you probably weren't around when we did our 2020 lessons for the market. And some of you maybe have forgotten and want to see how they compare and contrast to last year. So I pulled those up really quickly so we can look at some of the lessons / takeaways we pulled, our top 5 from the options market of 2020. And number 5 on our list for last year in terms of lesson learned from the world of options of that year was, hey, to watch out for early assignment. This is obviously something people have been aware about for a long time, but we saw the literal tragic consequences of this in 2020 when that early waves of new people were hitting the options market who still didn't really understand all the nuances. And we compounded that with some brokers who I think it was fair to say also didn't understand the nuances of this, or at the very least didn't communicate those nuances very well. And we saw the tragic results with the Robinhood customer who took his own life based off effectively an early assignment on a put spread that was communicated terribly from Robinhood. And so we all learned about that, Dan. Dan, do you recall that period where everyone and their mother was talking about early exercise, and it kind of was a shockwave rippling through the market last year? So.
Oh yeah, man. That was crazy.
It was crazy indeed. Let's go to number 4 from last year in terms of our lessons and takeaways. And we're going to crunch these numbers again later for probably on TWIFO coming up. Maybe not this week, maybe next week. But we run these numbers usually once a year, looking at the overall cross-asset correlation out there. And when we run those, it tends to bring to light one salient point. The old adage for the market is, hey, when it all hits the fan, correlation tends to go to 1. And we saw that a lot throughout the mad days of March and other periods in 2020. And we saw that reflected when we crunched the numbers last year in terms of the correlations, or perhaps surprising lack thereof, or perhaps surprising negative correlations that we saw out there, including things like Bitcoin was about 40% positively correlated to the NASDAQ, about 40% as well to silver. And for negative correlation, everyone says, oh, let's go to the rates, right? Let's go to, let's say, the 10-year, maybe the 2-year. Depends where you want to live on the curve. The strongest negative correlation we saw over the course of last year was the 10-year to the E-mini, about not even negative 50%, negative 46%. So for everyone out there who was allocating last year to, used to see 60-40, right? Maybe if you're wild and crazy now, it's 70-30-10. But whatever portion you're allocated, if you're going to that fixed income portion, looking for that diversification, for that inverse correlation. We still learn once again, Dan, in 2020, that puts are the only contractually guaranteed and therefore reliable source of inverse correlation in the marketplace, Dan. The hell with Bitcoin, the hell with fixed income. I don't care where you're looking. At the end of the day, puts are the only thing you can rely on, sir.
Yeah, man, I've been saying that for years. I mean, you can get some of this stuff with, VIX and gold and all that business. But, you pointed out the numbers. But, man, you want a direct correlation. I mean, look at the put, look at the delta, and boom, Bob's your uncle. There it is.
I had a conversation with someone the other day about the origins of that Bob's your uncle, where the hell it comes from, because it makes no sense. But that's a conversation for another day, Mr. Dan. Let's go off to number 3, takeaway / lesson learned from last year. You can maybe make an argument for this one making onto the list this year as well. But last year, one of our takeaways was, hey, if you're in doubt, just buy Bitcoin and Tesla. And you did pretty damn good last year. And spoiler alert, you did pretty good this year too, particularly in the first half of the year. That's when these things are really blowing the doors up. Both of them were absurd outperformers last year. They did pretty well again this year, like I said. And Tesla really kind of came into its own last year. It was number 2 overall in volume just about every day. And we saw that again this year, right behind Apple. Apple is still the big dog out there. Some days Tesla managed to topple it. Not many, but some days it was there. These days, Apple's doing some days 2+ million contracts by noon. Not many names can touch that out there. But at one point, Tesla was so popular in the option space, it was 17% of overall industry volume. If you looked at the numbers from OCC and the Opera feed out there. So Tesla really kind of came into its own last year. Obviously, Bitcoin did as well. And again, you could carry those lessons through into 2021 as well. The latter for Bitcoin also going to play into the options conversation we're going to have in a little bit. Speaking of the options conversation, number 2 in terms of our takeaways last year, we kind of termed it last year as being careful what you wish for, which was people have always wanted more options volume. They wanted to break records and blow these doors off. And I always said, at least personally on the network here, maybe be a little careful what you wish for, because we know options, when it comes to life and quality of life, sometimes options volume and volatility can be negatively correlated to those things. And we saw that last year. Obviously, broad quality of life for everyone across the planet plummeted. And indeed, life expectancy dropped the most it has, I believe, I heard the number this morning, since World War II last year. So obviously a terrible year across the board. But from an options perspective, solely through that lens, it blew the doors off. 7.52 billion contracts with a B, listener. I mean, these are ridiculous numbers that no one thought would be possible, at least not anytime soon, maybe down the road at some point, not now. And so to hit those numbers last year was pretty crazy. Dan, a little bit of a careful what you wish for on the volume front, right? Everyone likes a lot of options business and a lot of volume, a lot of volatility, but we don't always like what it requires to get there, sir.
Yeah, there's a Chinese proverb: "May you live in interesting times." So yeah, we're seeing that, and I mean, the volatility that comes along with the volume. I mean, that's kind of the same thing. It's something that we want because it offers opportunities, but it's tricky. I talked to a lot of people who did really, really good during certain parts of this year, and then things change, and all of a sudden they're not doing good anymore.
You can't say that for the market, options market at least. We'll get to that again in a little bit. And our number one takeaway / lesson learned from the options market last year was that retail is king. For a long time we all heard in the options space, it was the institutions. You needed to really cater to the institutions because they brought the flow, they brought the liquidity, they brought everything that mattered in the space. And the retail was kind of a secondary consideration. Fast forward to last year, and that worm very much turned. Retail turned the market on its head. And little did we know the taste we were in store for in 2021. It seemed like 2020 was the retail tsunami, Dan. But little did we know what was in store for us. But can you recall those heady days of last year, Dan, when it seemed like last year was the retail tsunami? We did not know what lay in store for us, Dan.
Yeah, I sure did. And, I don't I love this trend, though. I love that so many retail folks are getting in on it, because the listed options market is the great equalizer. It's the ultimate, these days we call it democratization, but we've been doing this since 1973, and just the regular old folks, the retail traders, which, me and you are part of these days as well. We all have the exact same tools that professional traders have. The only real commodity nowadays is knowledge. And man, a retail trader has the resources to get that knowledge and be as smarter than professional traders.
They do have access to some quality tools. Well, let's fast forward now to this year, listeners, 2021. What are some of the lessons learned? The takeaways are kind of top 5 takeaways, lessons learned, trends / developments, call them what you will, for this mad, insane year. Dan, I have my list, but I want to see if you have an addendum. So let's kick it off with Dan's list. I'll put you at number 5 here. What is your number 5 in terms of takeaways / trends / developments that you pulled from the options market this year, sir?
Well, I guess I could talk about a few different things. Well, let me start out with this one. Maybe I can do 5 and 4.5. One is always, continue learning, right? Continue to be versatile in the things that you do. Me, 12 months ago, I would never have thought that I was going to be, all into trading short squeezes and these very, big violent moves that happen over a short period of time. That was never my style in the past. And when I first, heard that was kind of the thing going on, I was like, yeah, I know that's just not me. And you know what? I embrace it. I'm really glad I did, because it was the opportunity of a lifetime this year.
That it was. We'll touch on more of that in a second. Let's get to ours. My number 4 here on my list, Dan, is going to be what was a big sea change for a lot of people out there, which is crypto options finally arriving for the lion's share of our audience this year. Now, obviously, we have a show called The Crypto Rundown on this network. If you're intrigued by all things crypto and crypto derivatives, listeners, you should definitely be checking out The Crypto Rundown. It is quite literally the only game in town when you're talking about crypto derivatives. I don't know of anyone else on the planet who's really talking about that stuff, certainly not to the degree we are. So check out The Crypto Rundown if you are intrigued by that. That's usually, and if you want to join live, that's on Mondays after the option block. But what I mean by arrived this year, because obviously Deribit's been around for a long time. ETH and Bitcoin options have been trading for size on Deribit for years now. But for the lion's share of you out there who are in the US listening to this, that's been a non-starter. You violated the terms of service in the US to go out to Deribit. You had to tunnel in with a VPN, and that's not a viable way to really maintain any sort of sizable balance. You could have those funds frozen as a result and kicked off Deribit. That's not any real way to trade with any sort of real consistency. So I say for the lion's share of you, Bitcoin options were kind of just a theoretical thing. They were cool. Then, of course, CME came around last year in 2020 and listed options on their Bitcoin futures. So that was a listed option for you. But it was an option on a 5 Bitcoin contract. It was enormous. Even now, where Bitcoin's flirting with or right up a little bit below, 50K, you're still talking $250,000 on a one lot there in terms of value of Bitcoin that you're trading. So it was a lot from too much for most people to bite off. So those options haven't really blown the doors off. We have LedgerX. LedgerX exists. They are a venue. You can certainly go there. It's a physically delivered contract. So what we've seen is most of the use case that has developed over there is covered call activity. People have Bitcoin and they want to use LedgerX as a way to get some income. And if it gets called away, then no big deal. They have the Bitcoin to go for it. So if that's your use case, that's been a great one for you, but it doesn't really fit most people out there. So fast forward to this year, Dan, and the watershed event that rocked the traditional options markets, but also really the crypto options market. You guys know what I'm talking about, listeners. It was the launch of BITO a little over a month ago now. This is, of course, the ProShares Bitcoin ETF. It was explosive for a number of reasons. First off, people have been waiting for the big Bitcoin ETF to really get approved and listed. And so Bitcoin, or I should say BITO, really beat everyone else out of the gate. People have been applying for these things for years, but SEC kept saying no. They approved this, maybe not in the flavor everyone wanted. Everyone wanted a spot Bitcoin ETF. They got a futures one instead. So again, if you've been listening to any of our shows, that shouldn't come as a surprise to you. But what was super fascinating and really compelling for a lot of our audience was almost instantaneously, about as fast as it can be, I think, at this point. As soon as BITO launched, within 48 hours, we had options trading on this thing. Again, I've never seen that turn around that fast. Somebody lit a fire under OCC over there. I'm not sure who, but it was obviously a high priority item. And it did millions of contracts very quickly. So they had a reason for listing it that quickly. In fact, right now, even as we speak, I just pulled it up for Showtime. The ADV is still about 60,000 contracts. There are a lot of names out there that would kill to do a tenth of that volume. So BITO is still doing a lot of paper. And for a lot of you, for a ton of you, I see the mail. You guys write into our crypto show and other shows all about this, saying, hey, I love this stuff. I want to trade it. How can I? And it was always, you had not many options. It kind of sucked. Don't get me wrong. BITO is not, the end all be all. It's not the most well-constructed product on the planet. I don't love it. I mean, it does what it says it does. And that's it. As long as you understand that, as long as you understand the roll yield and all the other issues with that, potential issues with position limits, as long as you understand that, there might be a drag on this thing and you're okay with that, it is a viable proxy to get into Bitcoin options. And we saw a ton of you doing it early on. It was very favorable for collars because the puts were cheap and the calls were super expensive. So you can do collars for credits, which is fantastic for a lot of people out there. So if you're worried about a little downside in Bitcoin, and again, who's not, then that was a good way to shield yourself and also get some actual income at the same time. It was fantastic. Not so much right now because we have seen a bit of a sell-off out there, but it's still intriguing stuff. And again, this opens the doors, opens the floodgates for what a lot of you really want. You don't want to have to go on a Deribit. You don't have to worry about custody and wallets and any of this nonsense or tunneling in with a VPN. You got access to options on Bitcoin in your regular, let's say, whatever, TD or whatever account you're using that you trade options on normally. You can now trade options on Bitcoin in there as well. A watershed moment, Dan. What were your thoughts on that? And what are your thoughts on that for my number 4, sir?
The Bitcoin stuff, it really truly, I mean, we talked about this on the show. It really truly was amazing how fast those darn options got listed. I mean, it was just freaking amazing. I've never seen anything like that either, man. But I mean, it's good to have that additional layer of flexibility. Again, I mean, I don't want to rehash stuff we talked about on old episodes. People can go back and check those out. But there are some nuances to these futures, ETFs, ETNs, and all that business. So it is maybe a little bit too bad that it's not listed on the actual spot, but I think with such a disjointed market, that's probably why they weren't able to do that. So, I don't know.
Yeah, well, the regulatory scene, they're not going to approve a spot thing anytime soon. I mean, look, this right on the time they launched BITO, we saw Bitcoin, I think, trade down to, I think, 8,000 on one venue when it was printing close to 50 everywhere else. So, yeah, that kind of stuff is gonna gum up the works for a spot ETF. Don't expect that anytime soon. The futures are the best you're going to get, and options on those through the lens of BITO is the best you're going to get for a securities account right now, listeners. All right, let's go on out now to this other takeaway. We've seen this for a while. Maybe we hit the apex of this trend in 2021, or maybe not. You'll see. I'll have a bit of a caveat at the end of this that maybe there is more to come. One of my main takeaways from 2021 from the options market this year, Dan, is you just cannot make a contract that is too small. The smaller the contract, the more people are going to want to trade it these days. I mean, everyone and their mother was racing each other to list a mini or a micro or some other smaller bite size. Maybe they play with the duration a bit. They get into the shorter duration, so weekly, so they're smaller by that shorter duration, whatever it was. Small was big. That's been the trend for a while, but again, it really kicked into high gear this year. CME listed, you had mini products across the sun. They added micros. The micro futures have been blowing the doors out. Now we have options on the micro E-mini futures. They added micro Bitcoin. Just a few weeks ago, they added micro ETH. So everything small is blowing the doors off. In fact, Dan, I mean, who would have thought we'd see this? Small is so big now that CME said, you know what? The hell with S&P futures. The hell with regular S&P futures. No one's trading these except for institutions anymore. And even they're trading mostly the E-mini. These are going the way of the dodo. Bye-bye to the big S&P futures. Now it's pretty much all E-minis. Dan, did you ever think you'd see that in a million years?
No, I mean, that is pretty darn surprising. And, just this idea that the exchanges, excuse me 1 second here. I gotta get the old frog in the throat.
I'll say, are you rating mid-show again?
No. This idea of the exchanges, all the exchanges listing these smaller size contracts and stuff, man, I have been saying this to people for years that they should cater to the retail audience. And it really took this sort of retail uprising over the past 2 years in order to actually catch the attention. I mean, I think we probably, as an industry, could have engaged retail even faster, just by nurturing them a little bit, So now they're kind of forced to be nurtured, which is great. That's fine. I'm fine with that, as long as it happens, and it's happening, and that's great. It's good for everybody.
Yeah, of course, I mentioned there's a caveat at the end of this. Dan, we may see how small is too small very soon, because in Q1 of next year, that's when SIBO plans to launch the nanos. I think you've been a little bit lukewarm. A lot of people are a little bit questioning. These are effectively one-to-one options now. So the multiplier is gone. So the leverage, which is a core component of options, is now gone. What do you think, Dan? You think that's maybe a bridge too far? Is that the too small level, or were these things blow the doors off?
You know what? I think that we're going to see some volume in them. I mean, it depends if the exchanges and the brokerage firms have thought the marketing through, and some of the folks watching the show might not realize that, yes, marketing is a thing for exchanges and for brokerage firms to create these contracts They've got to be created the right way, and they've got to get buy-in from all the appropriate parties, the brokers, market makers, and engage the retail and the institutions. And so to make that happen, it really is no small feat. So I hope they do, because I think it's going to be great. I mean, there's a lot of times where I'm like, there's some really high value stock, maybe it's NDX or Google or something. And I say, oh, geez, man, one full contract, that's a whole bunch of money. Or even some of the mid-sized ones. Should I trade one or two of these contracts? Well, now I can trade basically 1.5, right? So, yeah, I think it's going to be great.
Well, you know what is inarguably great? The notion, Dan, that I was skeptical coming into this year. I've said it many times. I said it at the beginning of this year. I did not think the market, the options industry as a whole could sustain that level of volume we saw last year. It seemed like a bit of an aberration. Everyone was home. Everyone was trading. How often are we going to see the entire population kind of locked down, right, and stuck with at-home trading? Because that's what we had. And that seemed like once that kind of went away, once we had a bit of a reopening, that would probably filter off. And we'd see stronger volume than 2019, certainly, but probably not going to rival 2020. That was my expectation. And man, Dan, could I not have been more wrong? I'm happy to say that I was. It's one of those ones it wasn't a prediction I was happy to make, but the inner cynic in me kind of comes out sometimes and expresses itself. Consequences be damned. And yeah, that's not the case, listeners. Literally everyone and their mother and their brother's third cousin, they are all trading options now. It is insane. I forgot who said it. Might have been you and Sinclair on our network recently who said, we wanted more people to come to the options market. We just didn't know they would all come at the same time. And that's kind of what situation we have now, where, I mean, even your most skeptical, reserved aunt somewhere is probably dabbling. Maybe she bought a call somewhere. Who knows? But it's that level now, listeners. And if you've been in this business for a while, like Dan and I have, it's amazing to see options discussed on this level, to reach this level of saturation and have it not be an overwhelmingly negative discussion. Usually when options reach a lot of mainstream penetration, it's because someone did something bad. It's because, we have the old long-term capital blowout or Orange County or Barings or any number of other derivatives associated fiascos that have stolen the headlines, and everybody weigh out their fingers and say, no, those options are bad. That's not happening right now. Everyone's loving them. I mean, sometimes too much. They're bidding things up like crazy and going nuts, but I mean, it's insane. So insane, listeners, that last year's record of 7.52, which I just talked about in our lessons learned from 2020, things that I thought was an aberration we probably wouldn't see again for some time, blew past that already this year. In fact, mid-October is when we blew past that. Already 8 billion contracts were cleared by the end of October, listeners. So everything now is just gravy, listeners. We're blowing the doors off across the board. It really is kind of just stunning, dare I say it, perhaps a little terrifying, Dan, these kind of numbers we're seeing out there. Hey, what are your thoughts on, now that it's official, we have beaten 2020, and your thoughts on what this means for the future, sir?
It's great. It's great because, like I've said this before, there's sort of like this, there's an ecosystem. And that's a word that I've thrown around a fair amount at the options industry conference that you and I traditionally both attend. And like, if all there is in an industry is market makers, it's not going to work. Like, they've got nobody to trade with. If all there is institutional people, it's not going to work. They've got nobody to trade with. If all there is market makers and institutional traders, it'll work a little bit, but that's kind of like running a casino where like you just open it up for gazillionaires and people come in and just place massively big bets. And, it's a lot riskier that way, where, what you want as a market maker or an exchange or a brokerage firm or a casino is you want lots of smaller traders or players. You want people to be taking different sides of this and different sides of that to get some back and forth trading. Like having these smaller players in the market, the retail players, makes the whole industry better. It just it makes it makes the whole industry better because like that volume is not a big tidal wave in one direction. I mean, sometimes it is, in some of these meme stocks and such, but that just creates more opportunities. I don't know. I mean, I could write a book on this. It's something I've been thinking about and talking about for years and years and years. And like I said before, it's good news.
The Retail Tsunami, featuring Mark Longo. I'll put a nice quote on your book, on your dust jacket. Sounds like a plan. What do you think, Dan?
Yeah, sounds great.
Well, we'll workshop it off the show. I like it. All right, let's keep rolling here. By the way, if you're wondering if options volume is slowing down towards the end of the year, at least so far, the answer is a resounding no. We have the numbers. I mentioned mid-October. We have the numbers through the end of November now. And the November, first off, the most active, the busiest month in the history of options. So November not slowing down, 949.3 million contracts going up in November. That's up 40%, 4-0 from the November of the year before. So, yeah, I don't know what to say at this point. ADV right now, so average daily volume, listeners, through the end of November now, 39.2 million contracts a day hitting the options market. I mean, that sounds like a lot to you if you're new to the business, but trust me, you've been around for a while. There were days when the whole business struggled to make that for months. Take you many months to hit those numbers, and now all of a sudden, bam. 39.2 million in a day. Crazy town. Let's get to our number one takeaway here, Mr. Dan, from the year that was 2021. We learned this lesson very quickly. January of last year, which was, you know what? At the end of the day, stocks that are super heavily shorted and maybe have some other financial foibles going on and have some issues that were traditionally viewed as, shall we say, questionable or perhaps risky investments. You know what? It turns out they're awesome, and we should all buy them because that's exactly what happened starting in January of last year when this whole meme stock thing really kicked off with GameStop. We saw it translate into AMC and a legion of others. Now, just listen to any of our programming throughout the year. Your Rockets, you name it. I lose track. Your B-Bigs, so many have fallen into that meme stock camp now. And this has transformed just about everything. It has transformed the way a lot of people view options. A lot of people are coming into the options market and they know nothing but buying calls. That's all they want to do. That's all they're interested in. That in and of itself is a game changer. It's completely different. We used to see people coming into options and they would dabble with buying some stuff, but a lot of them would go straight to the dark side. They would sell puts or they would sell calls against their stock. They wanted to collect that income. They went dark side very quickly. We're not seeing that anymore. We're seeing people coming in and bidding up calls in all these crazy meme names, so much so that it has caused a lot of very serious people to come on our network this year and say, maybe we need to rethink how we price these call things because it's kind of nuts right now. That seemed to be a bit of an overreaction to me, but these were a lot of serious people who were taking another look at that. I don't think that's needed, but that's how far we got pushed. In fact, this was the year where we all saw things that, again, go back and check out our This Is Not Normal episode if you haven't heard that yet, listener. That's a good one to kind of give you a little bit more of a baseline frame of reference for everything we're talking about here. But this is the year we saw things that we were taught when we walked on the floor of the CBOE really aren't possible. Like a 1,000% level of volatility at the money in a tradable name. That's not really a viable or possible thing. You may be in a crazy biotech once for like 30 seconds. But not something you would see sustained for multiple trading sessions, let alone people actively trading volume around those levels. And yet we saw that this year multiple times. So it's hard to really put into a coherent frame of reference the impact that this meme cascade has had over everything out there. Are we pricing calls correctly? Are people just buying calls? What do we do with these people? How do we migrate them into better volume? Obviously, it's translating into a lot of volume for the marketplace, which is good, but we want these people to be around in the long term. And most studies have shown us that just willy-nilly buying out of the money options is not exactly a long-term road to profitability. So teaching them how to trade a little bit better with higher probability of success is now our collective mission in the world of options. But Dan, it all kicked off with this notion of, hey, these stocks are incredibly shorted. Maybe let's buy them, Dan. What do you think? How can you encapsulate the impact of the meme phenomenon on this year, sir?
Yeah, it's one of those things where on the surface doesn't make any sense. It's kind of like like it's kind of very similar to, the market goes in spurts and how they digest good and bad news. And sometimes when bad news comes out, like, oh, the economy is doing worse, the market goes up because that means the Fed is not going to raise rates. Like we're not necessarily in that right now, but we see sometimes these things that it's like, I guess, roundabout sort of way I can make sense of this, but on the surface, it sure doesn't seem to. But it's really interesting diving under the hood of these heavily shorted stocks and really figuring out like why it works that way and how that call demand comes into fruition. It's been fascinating. Like that's the thing about trading the market is you'll never be bored. It always changes. There's always something new, and you're always learning. If you're a trader, once you stop learning, you're done.
And that music means we have to stop learning, at least for right now. But don't worry, listeners. We'll be back one more time here for the mad year that was and indeed still is 2021 with one last kickoff here. A send-off of epic proportions, a massive Q&A palooza. Before we do that, let's go around the horn. Dan, look at just the impact for you alone of the meme stock palooza. You're a raider now. You weren't doing that a year ago, so it has transformed your business in many ways. So if folks want to check out the rating or pick your brain on any of these topics we talked about here today, where should they go? What should they do?
Yeah, come on over to markettaker.com. I actually just had somebody email me this morning or last night or something, and he said he was from the show, and I said, hey, listen, you can just go to markettaker.com/join-free, and we've got a bunch of free classes there. There's lots of great information. So make your way over. You're welcome into the family.
Check out the family. Join the cool kids at Meanwhile, though, we got to head on out of here, but we'll be back, like I said, one final time with a great pro Q&A palooza. If you're listening live, if you're a Secret Club fan, guess what? You get to hear it right now. Everybody else, you got to wait a week. So we'll see you then with another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.